An out-of-control pickup truck crashed right into one of my rental properties. It veered off the road, barreled through a fence, and smashed right into the side of the block wall of the home, and the tenants were there, putting their lives at risk. Yes, this is in one of my Florida single-family rental properties, so let me tell you about how it turned out, what happened with the tenants, and the property value before and after the crash, and the rent income before and after the crash, and some of the lessons that you're going to learn for yourself from this really unfortunate circumstance. Hi, I'm Keith Weinhold. This is GRE. Yes, I am a direct real estate investor just like you, and you know, sometimes as a direct real estate investor, as good as it is, you do feel the bumps. That's what happened here. But the upside about being a direct real estate investor is this is the way that you feel all 5 ways that you're paid over the long term with real estate. Number 1 is appreciation. Number 2 is cash flow. Number 3 is a return on amortization. Number 4 are the tax benefits. And number 5 are the inflation profiting benefit that you get when you tie up long-term fixed interest rate debt. Yes, the family that's renting from me was there in the home, there in the living room, which is near the front of the home. Luckily, the vehicle ran into the back of the home, so none of the tenants were hurt, and they were able to get temporary housing because they were displaced from the home. The damage was that bad. Now, it did a lot of damage to the kitchen and the cabinets, and all new appliances were needed. And yeah, there was structural damage as that pickup truck ran into that block wall of the home. It had to be replaced. Now, this happened in March, just about 2 years ago, and you know what else makes this almost incomprehensibly unfortunate? The date of the loss, which was March 12th, 2020, coincided like directly with when, COVID was really just getting to be a thing in America, and there were government-forced shutdowns of all these offices. Yes, like on the exact day that this truck struck my rental home. And the reason that that caused problems is when we're trying to get this place rebuilt, not only were workers increasingly calling in sick and people really didn't know how much of a thing COVID was going to be then, but the county permitting office was also closed, so we couldn't get the permits in order to do this work. So now we have tenants displaced in temporary housing. They got better permanent housing later, but here we have a vacant property that's not producing any income for me. So it got really frustrating as the months dragged on and we could not get the work done. Hey, go ahead and put a like on this if you like that I'm telling a true, real life, kind of hard to talk about and dredge up sort of tale again, and the lessons that you can get from this. So yeah, you can see here some of the block and stucco that needed to be rebuilt. We also had to have them do a substantial kitchen rebuild, the contractor there in that area in Florida, and new cabinetry, and new granite countertops, and backsplash, and a sink, and a faucet, a dishwasher installation, and then they also had to replace the outdoor fence that the truck had barreled through, that section of it anyway. We decided not to replace what's called the Florida room in the area. The Florida room is really just a screened-in porch that a lot of these homes have out back. It just wasn't feasible to go ahead and replace that. This is an older property, and a lot of tenants don't really expect or look for that anymore. So its marketability was not that important. So it cost between $30,000 and $40,000 to renovate the home and finally make it habitable again. But I'll tell you, it took me a dozen or more emails and phone calls to my property manager in that market there in Florida to coordinate this and really help to coax and motivate and get things moving along. And oftentimes the property manager would show up personally and go to the contractor's office to see what was going on. It was a really long, slow process. This ended up being a 9-month ordeal with permitting offices that were open and closed, and contractors that were scrambling to get enough workers with labor shortages and supply shortages. A 9-month ordeal to make this place whole again. Just ridiculous. Jeez, it was ridiculous. Now, insurance did pay for the cost of renting this, and it still took some of my time as I would look over those invoices, but that was really more put on my property manager for them to gather up all those things and put in for the insurance claim with my insurance company because I have a landlord's policy for that property. So I really didn't have any out-of-pocket costs. Now, importantly, when you are a landlord and you get a landlord's insurance policy, first of all, understand that your lien holder, your bank essentially, is going to make sure that you are insured. You need to have that because what your insurance policy does is it protects the quality of the lien holder's collateral. That bank has that home as collateral in case you default on the loan. So you're going to have insurance. And then something that you would expect with a landlord's policy is something called loss of rent coverage. I was getting $1,200 of rent on this property from those tenants until that light pickup truck smashed into that home. Well, I need to be made whole again as well with loss of rent coverage. So $1,200 of monthly rent times 9 months of vacancy means I'm also compensated another $10,800. That's just to make me whole because I did not collect the rent from the tenants. So that's a loss of rent policy with a landlord's insurance policy. Now, if you're a new investor, I'm just letting you know, hey, this freaky, weird type of stuff can happen, obviously, but this is definitely not typical. I have been a direct real estate investor for 19 and a half years, and this is by far the strangest thing that's ever happened. Besides being a freaky event, it also coincided almost directly with the launch of COVID. And by the way, what do I mean when I say direct real estate investor? I mean not owning some sort of fund or investing in a REIT, but I have been directly investing in real estate for 19 and a half years, rental property, not primary residences, property that I rent to others and own the title to. So let's look at some more numbers. In November of 2018, I bought this Florida. It's about 45 minutes north of the Tampa-St. Pete area, by the way. I bought it for $145,000. And shortly after the renovations were done, I refinanced it in order to get a lower interest rate. And with that refinancing, I also have an appraisal done. Well, that appraisal in March of 2021 came in at $185K. So that's $40K of appreciation. That's 28% in just about 2.5 years. Pretty good. And it's probably appreciated a good bit more, probably somewhere over 200K. Here is what the value is probably about a year after I had that refinancing done. Hey, go ahead and put a like on this if you like that I'm talking about a real property, a real situation, a real bad situation with real world numbers. Even though I probably don't deserve the like, I would really appreciate one. And now maybe you're wondering, as such a long-term investor, why do I even buy smaller properties? Yes, I do buy substantially larger properties and apartment buildings, but it's really good to have single-family homes, something that's more resilient value-wise over the long term. It's such a good deal. You get such good financing terms on 1 unit up to 4 unit property, single family homes up to 4plexes. You can get 10 to 20 of those at really good rates and terms, or even more now. So I always want to maximize those 10 to 20 finance properties in that 1 to 4 unit space. And hey, there is some more good news. With the new tenant that we got in after the new renovations were done, the property had looked a little bit better too, because this property was made new with those new countertops and appliances and amenities and everything else. We got the rent from $1,200 up to $1,350. That's a 12.5% rent increase there. So that was a bit of a sweetener on still a pretty tough situation overall. So some lessons here. Number one is to be insured. Like I said, your lien holder is going to make sure that you're insured. That's what makes you whole again. And from your perspective, you need to think about the fact that really your tenant pays for the insurance premium, because you wouldn't even buy a property and typically shouldn't buy a property unless the rent income meets or exceeds all of the monthly expenses. All those expenses are the mortgage, vacancy, insurance, maintenance, taxes, utilities, and management. The second lesson, this is an optional one, but having a property manager really helped make it easier for me. They were the ones that could oversee things locally in that market. The best deals probably are not in the market that you live in. They're probably out of state, so I like to have a manager in that market so they could manage a claim for me and see that the situation came together. And lesson number 3 is, long term, you've got to expect a few bumps in the road. God forbid, I really hope this never happens to you. Nothing like that. But just go in with the expectation that this is real life stuff. I mean, these are real properties with humans living inside them and elements acting on the outside of them. So what could go wrong? Well, something every once in a while for sure. So hey, I'd like to bring you both the good news and the bad news as well. If you're wondering where would you get a property or how did I find a property like this where the rent income meets or exceeds all the expenses, that is at gremarketplace.com. That's where me and my team vet the best providers nationwide in markets where the numbers make sense, investor advantage markets. I hope this tough lesson helped you and put into perspective what you hope never does happen, but surely can happen. I'm Keith Weinhold. Thanks for being here, but you weren't here for me. You were here for you. We'll see you in the next video.